Brace yourselves, Portland. Mortgage rates are on the rise again. Is buyer excitement fizzling out, or are we going to watch another wave of market resilience? Dive in with me as we crunch the latest numbers and spot the trend line shaping Portland Metro's real estate market. Let's take a look. We saw some strong numbers in homeowner equity this week. The average sale price surged by 6% compared to the previous week, and we landed 5.2% higher than last year at this time. As I've said, it is normal to see prices accelerating this time of year, but this feels atypically strong, so I suspect we'll see a bit of moderation next week. Keep in mind that this figure is less about what's going on our market today and more about what was going on 4 to 6 weeks ago when these purchase contracts were first agreed to by buyers and sellers. When it comes to buyer demand, the number of purchase agreements signed by buyers and sellers was down 5% this week from the previous week. That's the second decline we've had in 2 weeks at a time when demand should be growing. Even with the decline though, we still outpaced last year's number, but only by about 3%. If you've been keeping up with these updates, you'll recall that I've been a little bit concerned about the low number of lockbox opens. That's one of our best measures of high intent buyers out with their agents looking at real estate. Well, it looks like the dam finally burst with 33% more opens than the previous week. That's on the Oregon side of the border. Compared to last year at this time, we saw more lockbox opens in both Oregon and Washington. That being said, I'd like to see a couple more weeks with strong numbers before I put those concerns of mine to rest. The number of homes that were new to the for sale market was way up by a whopping 74% compared to the previous week. However, we were expecting a big number this week for a couple of reasons. First, we came off of the week of Easter when we saw a really low number of new listings hit the market, and this is a bit of bounce back from that really low number over the holiday week. The second reason is simply the time of year. We typically see an increasing number of homes hitting the market for our spring buying and selling season, so I suspect that we'll see some serious moderation in that number this next week. Now on to the big news, the chaotic land of mortgage rates. This week we saw the 30-year fixed rise to a high of 6.75% optimally, with most lenders above that 7% mark right now. This looks like fallout from a really strong March jobs report and some hotter than expected inflation data also for March. This pushed the yield on the 10-year Treasury, one of our best indicators of where mortgage rates are headed, to the highest numbers we've seen since last October. I'm extremely curious to see what sort of effect this will have on our market and if we experience a big decrease in next week's buyer demand numbers as a result. And just like that, you made it to the end of the update. If you're buying, selling, or just market curious, be sure to hit that subscribe button to stay informed and ahead of the curve when it comes to real estate. I look forward to seeing you right here next week with the very latest in stats and trends.